Hey guys, Chris from Adapt Tuition here, and in this video we're going to be hitting some PoA multiple choice questions in preparation for the July 2020 CSEC exams. As you guys know, because of the whole COVID-19 situation, we will not be having a paper 2, and the examining body has opted to just take your paper 1 multiple choice mark and your SBA mark. So in preparation for that multiple choice paper, I have gone through about 12 years worth of past paper questions and devised my own using the CSEC questions as inspiration. Right? Of course, I couldn't copy them wholesale because that would be copyright infringement, and I want to get charged and eventually being sued for $1 million. So with that being said, we're going to go through some questions today, and my plan is to put up one video a day, so hopefully by the time we hit the exam, you guys will be more than ready. Anyhow, let's get to it. Okay guys, so let's take a look at question 1. Now, before we jump into it, just remember, it's most important that you read your question. Read and understand, right? It's all well and good to go through all those past papers and use the solutions I put up on Instagram and Facebook and try to learn off the answers. But next thing, they bring some different questions in the exam and all that memorization goes out the window. So read your question, understand it. Yes, sometimes you can't help but know a question when you see it if you've done enough papers, but please read and understand, and don't just stop when you find the answer all the time. Sometimes you may need to read through the rest of the solutions, the options there, to make sure you are picking the best answer. Okay, so let's go. So number 1, so they like to bring a question. So it says the major objective of a non-trading organization is, now even though they put this word here in bold and capitalized it, it is not the most important word or phrase in that sentence in the question. This is non-trading organization. What is non-trading organization? How does an organization not trade? Well, for those of you who have done non-profit organizations, that is what this is referring to. And I'll tell you, when I first saw this question, when I was doing the multiple choices, I had no clue what they were talking about, honestly. And this was like within the last 5 years. I had up to that point never heard of a non-profit organization being referred to as a non-trading organization. Anyhow, that just goes to show no matter how many years you've been teaching, you don't necessarily know everything. And it's always good to keep an open mind and to continually educate yourself. Anyhow, so if it's a non-trading organization, what are they not doing? They're not trading. They're not buying and reselling goods to make a profit. So it means that profit maximization is definitely not what we talk about. Right? Profit maximization is out, right? Further, why would they be importing and exporting goods? That is not their major objective. So that's also out. What about maximizing dividends for shareholders? Do non-profit organizations even have shareholders, much as pay any dividends? Nope, not at all. So by process of elimination, the answer has to be providing services for its members. Sorry about the scrolling up and down. All right. So providing services for its members, yes, let's go with that one. All right. Where the blue came from? Where? I don't know. All right. Sorry. All right. So providing services for its members. So that one comes in quite a few papers or a version of that question. So look out for that keyword, non-trading. Question 2. Accounting may be defined. Oh, nope. I'm doing something wrong there. Right. So accounting may be defined as. Now, if you don't know your definition of accounting, now is a good time to pay attention. So option A, using journals, ledgers, and control systems to classify and sort financial information. Now that sounds real nice, right? We do use journals, we use ledgers, which are books of T accounts, and we have control systems such as what? The trial balance, control accounts, and what else? Your bank reconciliation system. Good, I'm embarrassing myself today, boy, things bad. Anyhow, but the thing is, that kind of talks only to the recording aspect of accounting. As we know, accounting has a bit more to do than just recording. That's the bookkeeping aspect, right? We have the bookkeeping, but what else do we do? Let's take a look at option B. So let's leave option A alone for now. Let's take a look at option B. The use of economic information to facilitate decision making. Well, that does play a part in it, right? So once again, if you don't know your definition of accounting, that is part of it. So maybe if one of the options further down combines A and B or says both of the above or A and B only, we could pick that option, but either one by itself is incomplete. So let's see, let's keep on reading. C, recording the financial impact of transactions on the business. Now that one seems a bit redundant. That one seems a bit too related to option A. So we have no choice now but to read option D. Right? So recording classifying, presenting, and communicating financial information to help with decision making. Now, of course, there are many different ways to say that, and you may have a very nice fancy one or a nice simple one from your teacher, which is great, right? But at the end of it, there are certain commonalities in all of the definitions. And I think that one best fits the answer for what we're looking for here, right? So recording, because the recording aspect is A and C, and of course the last piece here, helping with decision making, that's option B, right? So that, I believe, is the best option. Now we have a next question asking about accounts. So I'm trying to give you questions similar to ways they would bring them in the exam, so we have a nice feel for what can come. All right, so accounting is the process of. So think about what we just did. We talked about recording, right? Classifying, summarizing, communicating information, and then using said information to make decisions. So let's take a read here. So it's the process of sourcing physical and financial capital. That doesn't sound like accounting. Now let me show you a trick. If we know for sure in a question that is item 1 is out, go to the options and eliminate all of the options that have question 1, which include A, B, and D. Which means C by elimination is obviously the answer, right? So there's some little hacks you could use to make your life easier with multiple choice. But remember to read. Let's just double check. So it says recording, so item 2 says recording, classifying, summarizing, and communicating financial information. So yes, that is good. 3, using financial information for the purpose of making informed decisions. Yes, so 2 and 3 I would definitely agree with. All right, so let's highlight that. Boom. Okay, so let's take a look now at question 4. So it says the correct sequencing of the steps in the accounting cycle is. Now, I remember the time I asked in class, all right, who knows what the accounting cycle is? And a man say, so that's what the accountants is write to work? No. Accountants don't write an accounting cycle. Please, no. It is a series of steps that carries us from the beginning of the accounting process, which is where we have transactions, all the way to the end, where we construct and present financial statements. So we have several steps. Now, according to what textbook you read, it might vary a little bit, but you're supposed to have transactions that give rise to source documents. The source documents are then used to enter information into the books of original entry, otherwise known as journals, or books of prime entry. So journals should be the first step in the accounting cycle. Let's take a quick look at options. So ledgers, no. Journals, yes. Trial balance, no. Journals, yeah. Some of those TikToks, you might want to go, nope. Yup. Nope. Anyhow, sorry. So we could eliminate A and C. Now, after journals, we post to the ledgers. The ledgers are the books of T accounts. And after we post the ledgers, we balance off and extract a trial balance. After we have our trial balance, you do your adjusting and your closing entries, and then you have your financial statements or final accounts. So after journals is ledgers. So option B is, right? Option B is definitely out, which leaves option D as the only correct answer. Journals, ledgers, trial balance, and then final accounts. So it's missing adjustments and closing entries. Oh, nope, sorry. Wasn't supposed to cross it out. Was supposed to highlight it, right? So if you don't know your accounting cycle, go back into your textbook, go back into your notes, find it, watch over this section of the video, learn your accounting cycle. Okay. Number 5. Pardon my accent. We've been watching many shows on Netflix. We're watching The Last Kingdom. I don't know if I'll get copyright strike for that anyway. Anyhow, sorry. And have plenty of accents. And for some reason, I like to imitate accents. Not that good at it, but it happens. All right? Anyhow, so any expense still owing at the end of a financial period must be included in the income statement and shown in the balance sheet as a current liability. This is an example of the application of what accounting concept or assumption. So if you don't know your accounting concepts, pay attention here. Right, let's read over the question again. So any expense still owing at the end of a financial period must be included in the income statement and shown in the balance sheet as a current liability. So, expense owing. There's a key word for that. What is that word? Accrual. So an accrued expense. Yes, that's an expense owing at the end of a financial period. And where does it go in the balance sheet? In the current liability section. Right. So what they're asking is, what is the principle that governs how we treat with accruals and, by extension, prepayments, accrued and prepaid expenses and revenues? Well, we kind of gave away which one it is because it's in the name. It's the accruals concept or the matching principle. All right. So this is prudence. What does it keep doing? I don't understand. Right. Prudence, separate entity, consistency. Aha, accruals. Now, the next few questions will actually have those other concepts there, and those will be the answer for some of those concepts, or some of those questions, sorry. So I will actually be explaining all of those, but I just wanted to explain this particular one in this question, right? So the accruals concept or matching principle is what governs how we construct financial statements with respect to including revenue earned, whether received or not, and expenses incurred, whether paid or not, in the income statement, right? If you know your shortcut, if you've never seen my video on how to prepare income statements for accrued and prepaid expenses, I'm gonna put a card up. Oh God, it's been so long. I'm not even sure. Is this side, right? Yeah, I'm gonna put a card up there, and I'll link in the description below to my whole income statement playlist. All right. So be sure to check it out if you need to, because there are some multiple choice questions that ask you to essentially do a T account test. So don't feel because it's multiple choice, you don't have to worry about doing income statements. Trust me. I don't know why I was doing this. No, I know why. I won't get into it. Anyhow, sorry. So a business owner records his personal rent expense in the rent expense account of his business. I'm not sure he's supposed to do that. Which of the following accounting concepts did he violate? All right. So, the answer here is the separate entity or business entity concept. This concept states that the accounting records of the business must be kept separate from that of the owner, right? The business is its own legal entity, and as such, its records must be kept separate from the owners. The owner can't be putting his stuff randomly, willy-nilly inside the business. No, that's not supposed to happen at all. Right? So this separate entity or business entity assumption or concept is what is being violated in this question. Okay, so that's the questions. We have a few more because I'm already watching my time. I didn't want the video to be too long. All right, so let's go. The accountant of Spurunculums Incorporated depreciated the company's motor van using the straight line method in the first 2 years of the asset's life, and then switched to the reducing balance method in the 3rd year without a sufficiently good reason for doing so. Just by the way, if me highlighting is annoying you, just wait till I'm done, pause the video and take a read, all right? I'm sorry, I'm just trying to eliminate a lot of my editing in post, right, to get these videos out quickly. So, which of the following accounting concepts did he violate? Okay, so what happened? The accountant depreciated the company's motor van using the straight line method in the first 2 years of the asset's life, and then switched to the reducing balance method in the 3rd year without a sufficiently good reason for doing so. So it means that if you have a sufficiently good reason for switching, it can be allowed. What's being violated here is the consistency concept. To be consistent means to do the same thing over and over. Well, that's repetitive, but consistency means doing something repeatedly. In the context of accounting, the consistency concept says you must treat with items in the same way or consistently from 1 year or from one accounting period to the next. And if you need, and when I say treat with them, as in, for example, here, you need to apply the same provision for depreciation method for the asset because you chose that method for a reason, and you can't just randomly change it without a good reason for doing so. All right? And there are lots of other applications of it, but I don't want to get into them right now. I want to kind of finish these things. If you all want to find out more about it, you could Google it, you could ask in the comments below, but that's what it is for now. You need to apply the same concepts consistently year to year unless you have a sufficiently good reason for changing the way you apply it or for changing the accounting treatment of it. All right? Okay, number 8. Which of the following is the assumption that the business will continue operating into the foreseeable future with no intent or need to significantly curtail the scope of its operations or to cease operating entirely? Okay, that's a mouthful. Let's read that again. All right, so which of the following is the assumption that the business will continue operating into the foreseeable future? Okay, with no intent or need to significantly curtail the scope of its operations or to cease operating entirely. So this is an assumption that says the business is going to continue operating and has no need to either reduce or curtail its operations or cease entirely, right? That answer is the going concern. So the going concern basically says the business is going to continue doing business. That's why it's called the going concern. We are going to continue operating. We are going to continue doing this, that, or the other, and we have no intention to close down shops or to shut down. Long story short, right? So once again, if you have to replay this, pause it, take a look, do what you need to do. If you have your notes now, if you guys going through this and you find that I don't give a proper explanation, please tell me. I am not perfect. I've been teaching for a number of years, but I know that I don't know everything and my explanations will not always resonate with everybody. And I'm fine with that because I, just like everybody else, have a lot to learn, right? I know a lot, I like sharing it, that's why I'm doing these things. And I don't mind if you find I didn't say something properly and you want to talk nicely or politely about it in the comments below, please feel free, okay? I'm very open to growing and improving, and if you have something that's a better articulation, that's fine. Please share it so everybody else could benefit, all right? Okay, last question for this section, and then we will stop. So number 9, the principle, don't know why it keeps doing that. Right, so the principle or concept that guides businesses to do things such as make a provision for bad debts or value inventory at the lower of cost or net realizable or market value is the, right. So which principle does it? So what is it telling us to do? To make provision for bad debts or to value inventory at the lower of cost or net realizable or market value. So even if you're not sure about that last half of it, what's the first half? You guys know your provision for bad debts? If you don't know, I'm going to put a card right up there. Go and watch my provision for bad debts video. And also in the same playlist from before, I did an income statement video where we treat only with the adjustment for the provision for bad debts. So make sure and watch those things if you need to, okay? Okay, so long story short, the answer here is the prudence or conservatism concept. Let me explain. Prudence, by definition in I think the IFRS for SMEs or whatever the case is, says it is the exercise of caution in the face of uncertainty. For example, we are now living in COVID times, COVID-19 times. It is June the 1st, and we've been not on lockdown, but we've been kind of relegated to being home for about 2.5 months. And if you had to go out, you had to make sure and wear your mask, you had to make sure and wash your hands out of an abundance of caution. We've heard that phrase quite a number of times. Because let's say you went out and you went to the grocery and you brought stuff home, you need to clean all that stuff before you carry it in your house, unless you have a specified place in your house to clean it. And then when you go in your house, don't you take off your shoes first and wipe off the soles? Have you been doing that? Because you don't know what germs are tracking in your house, right? Anyhow, so even if, let's say you went out and it didn't even come out of the car, right? But then you got home and you weren't sure, did I come out of the car, did I not? What is the cautious or prudent thing to do to protect everybody in your home and yourself from possible contamination and infection? Clean, right? Be prudent. So how does that apply to accounting? With the provision for bad debts, our debtors figure in the balance sheet, maybe let's say 10,000, 50,000, but we know history has shown some proportion of debtors don't pay, especially in these COVID times. People have been negatively affected. Their revenues have been negatively affected, right? So I had some clients who are not in a position to pay me, and this is not a knock on them. I hope I'm not trying to embarrass anybody, but the thing is, I have to know that and cater for that in my records, all right? And I mean, this is real. I mean, we hope people can recover from this, you know. So anyhow, so what I need to do is I need to adjust my receivables figure down to give a more realistic idea of the actual amount of money I can reasonably expect to receive, right? I have to, because what do I have to do? I have personal expenses, I have budgets, I have bills to pay, I have food to buy. So I don't want to make a plan for my expenditure based on a higher figure that actually is going to come in. I would rather plan with a much lower figure than necessary and cut back where I have to cut back, and I actually get more in than I plan with a higher figure and not enough comes in, and my plans now have to change drastically, right? So that's what prudence is, how it applies to accounting. So same thing with businesses. You don't want to overestimate how much money is going to come in to the business. You need to be prudent. So that's why we create the provision for bad debts. this thing here, the lower of cost or net realizable or market value, that there is another piece that is actually a question I'm going to bring in another video, because they've brought that question multiple times. And in one instance, I think it was the Jan 2017 paper, they brought the question and they did not have a correct answer for it. So actually, a future video I want to do, all of the questions that had errors, I want to compile all those questions and put them in a video. But once again, that if I have time to do that, I'd rather put out stuff that is useful to you guys and stuff that is just me bad talking CXC, which is not my intention. Never know, it might strike. Anyhow, so when you buy a stock, let's say you bought stock for $1,000, and let's say because of the changes in the market now prices your stock at, let's say, 800. You cannot keep your stock on your balance sheet at 1,000, which is what you paid for it. You have the invoices to back it up, but you cannot put it as that, because the market will not pay you that money for it. It will pay you 800. So you need to write down your stock and write off that loss on your income statement. All right. So prudence or conservatism is the final answer there. Okay, guys. So this video went on longer than I actually intended. I wanted it to be 10 minutes long. It's 20 minutes long. So I apologize if I am talking too much, but I hope some of you guys are finding value in my explanations. Sorry. Once again, if you have any questions, please feel free to message in the comments below. Hit me up on Instagram. I prefer Instagram and Facebook in terms of messaging, because something going on with the Messenger app on Facebook. Facebook, if you're hearing, fix that. I know we're going on with it, right? Yeah, and once again, guys, I can't get back to everybody right away, because I do still have classes to teach, and I'm making more of these questions and making these videos. So if you all send me a message and you ask for some help on something and I can't get back to you, please. It's not that I don't want to help, it's that I can't help everybody all the time. I'm real sorry, right? But hopefully these videos will help. Anyhow, guys, till next time, remember, you could be anything you want to be, you could do anything you want to do if you have the correct mindset and you put in the work. Along the way, you're bound to have some trouble some way, somehow. And if that's the case, if what you're trying isn't working, then you're going to need to try a different approach to it. You're going to need to adapt, because change is the only constant. All right, guys, thanks for watching. Please feel free to like, share, and subscribe. And until next time, I'll see you. Bye.